Folks, this is a 30+ minute video of me downloading the latest document from the Treasury that adds some additional clarification for the PPP program focused around self-employed individuals and partners of partnerships. So we talk a little bit about the payroll portion. However, most of what we'll be discussing, it additionally clarifies companies or self-employed individuals that don't have payroll, how they go about getting the PPP loan. Now, it's going to be a little bit of advanced in nature. So if you're brand new to the concept of PPP loans, the Paycheck Protection Program, go in the description. I'll put a link to a different video where I break down what the loan's all about kind of from scratch. But if you've been following all the changes and all the things that have been adding to this law and clarifications and the conflicts between the government, the banks, the SBA, Treasury, all trying to figure out how to go about executing on this loan, I think this document gets us a lot closer. Now, if you can read a 20-page document quicker than you can watch a 30-minute video, then I'll put the link in the description below. Download the document and read it on your own. If you want to watch me read it and add some additional commentary of what I think as a CPA, how I'm going to do it myself for my clients, and how I plan to take what I'm learning from this in order to help my clients get funding on a PPP loan, assuming that there's still funds available in the program, or hopefully they'll add some additional funds, Congress, to it. So to include more self-employed individuals that quite honestly have been getting the short end of the stick here. A lot of businesses, medium-sized businesses with employees, 20, 30, 40 employees, they're getting hundreds of thousands of dollars or millions of dollars of relief from the program in order to maintain payroll. But for self-employed individuals, there's a lot of hurdles. And for the most part, I think it's lack of knowledge. People don't understand what it is. They don't understand how the program is designed for them. They don't understand how to put documents together. They don't have a good accountant that can help them. So hopefully through this video, I'll show you exactly how to read the document, what it means, and maybe you can have some immediate plans, call to action plans you can take immediately in order to be able to go to your bank, have the correct documents, have the correct amount calculated, and hopefully you have access to the PPP funds. So here we go. Now, the very first guidance that came out was the interim final rule that came out on April 3rd. That was the first day that the Paycheck Protection Program was launched, and the interim final rule contained all the guidelines for both borrowers and lenders of exactly how these $350 billion were going to flow through banks and into the small businesses' bank accounts so they can pay their employees. They had touted that starting April 10th, a new program for self-employed, which is sort of phase 2 of the same PPP program, was going to launch, and a lot of banks started taking applications, but there wasn't a whole lot of guidance exactly on how that worked. So they came up with a new document that says interim final rule, additional eligibility criteria and requirements for certain pledges of loans. I don't know what the second part means, but additional eligibility criteria, it's what we're going to be focused on. So I'm going to click on that document and I'm going to highlight. It's about a 20-page document. I'm going to highlight what I think matters, what I think is essentially an update from my previous PPP videos. I'll put a link in the description below to my latest PPP video. So if you want to kind of follow in continuation what I've been talking about in the news, that I'm pretty much letting you guys know the changes that have been going on. Because again, if you're a small business owner with employees, you definitely want to take advantage of the PPP program. It gives you additional funds to pay your employees for 8 weeks. If you're a self-employed individual without employees, you also want to have access to the PPP program because it gives you additional cash to pay yourself as a self-employed person, pay yourself so you can continue to have a viable business. And if you're a partner in a partnership, that has not been talked about at all, and this document clears that up. And I think the document does a really good job at explaining exactly how it works for partnerships, because in the accounting community, we had all sorts of theories around how self-employed people and partnerships were going to approve payroll costs essentially through this program. So I'm going to scroll through this document. At some point in page 4, kind of the meat starts coming in. So we have here the first piece that says individuals with self-employed income who file a 1040 Schedule C. If you haven't filed your 2019 tax return, then you have to look at your 2018 to see if you have a Schedule C. If your business just started in 2019 and you haven't filed your 2019 tax return, then I urge you to file your 2019 tax return or at least prepare a draft because they are going to require that. So it says here, I have income from self-employment and file a Schedule C. Am I eligible for a PPP loan? The answer is yes, you are eligible for a PPP loan. That should be no news to anyone. We've talked about this before. Conditions. 1, you have to be in operation February 15th, 2020. So your business at that day had to have been active. 2, you are an individual with self-employed income. So you're an independent contractor that receives a 1099, or you're a sole proprietor of a business that you file under your personal tax return. This also means you're a single member LLC filing a Schedule C. Again, if you don't know what any of these things mean, then you want to talk to your accountant or look at your tax return and you will see. If there's a Schedule C there, then you qualify. That's what self-employed income means. Condition number 3, your personal place of residence is in the United States. So you live in the US. It doesn't say you have to work in the US, but I assume it makes sense that your business has to be in the US. But it says here your principal place of residence is the US. Condition number 4, you have to have filed or will file a 1040 Schedule C 2019. So that means that if you filed your 2019 tax return, pull out your Schedule C. If you haven't, pull out a draft of it or draft one, create one. And I'll do another video explaining how to put together a Schedule C. That will be an entirely different video. That has been one of the most popular requests that people have given. As a matter of fact, if you agree, put in the comments below that a Schedule C, it's a needed video that you need from me, and I'll take my time and do that if enough people request it. So it's in the pipeline anyway. However, now this is a quick pause from self-employment. We're going to move to partnerships, and I'm just going to follow the document and kind of skip self-employment, put it to pause for a second. Let's talk about partnerships. So a partnership or an LLC filing as a partnership. So it says here, if you are a partner in a partnership, you may not submit a PPP application for yourself as a self-employed individual. Instead of the self-employment income as a general active partner can be reported in the payroll cost up to $100,000 annualized on the PPP loan application filed by or behalf of the partnership. So what that means is if you are self-employed because you're a partner in a partnership, so you don't get a 1099, you don't get a W-2, you get a K-1, which is a flow through of the partnership's net income, very typical for LLCs, flows through in your personal tax return. So if you are in that situation, then you need to file a PPP loan under the partnership. And then you're going to use those distributed profits that are in the K-1 to figure out what the dollar amount is. My recommendation is you pull up a K-1. I'm going to show you what that looks like now. So you're going to find the K-1 for your partnership. And then down here, you're going to see box 14, which says self-employed earnings. This is going to be a combination between the ordinary business income that the partnership is flowing through to you and the guaranteed payments, which is 4A. So 1 and 4 are the income that's allocated to the partner, to each individual partner that pays self-employment tax. If you go to box 14 and there's a 0 there, you will not be eligible because you're not a general partner. You're probably a limited partner or a foreign partner of some sort. And because you're a limited partner or a foreign partner, you're not eligible for this because you are not a general partner. That's exactly what the document is saying. You need to be a general partner or the income of a general partner. It says it there really, really clearly. So that's a really important point because a limited partner actually gets a tax savings because they don't pay self-employment tax. So I love tax savings, but this is where the IRS and Treasury and SBA is sort of a line that says, hey, you can't double dip. If you get the tax savings from not being a general partner, you can't get the PPP loan because this is not your main source of income. This is just your investment income per se. Then it says partnerships are eligible for PPP loans under the Act. Limiting partnerships and its partners and LLCs filing as a partnership to one loan application is necessary to ensure many eligible borrowers as possible obtain a PPP loan up to the deadline of June 30th. So you have until June 30th to apply. This limitation will allow lenders to more quickly process applications and lower the burden of applying partnerships and partners. Basically, what this says is it was getting way too confusing with partners of partnerships and partnerships in combination applying for a PPP loan. So this sets it down and says this is the rule. Individuals that are not Schedule C filers will not apply for a PPP loan. The partnership itself will apply for the PPP loan. Then it says the administrator, which I assume is the SBA, has further determined that permitting partners to apply as self-employed individuals will create unnecessary confusion regarding entity, the partner of the partnership, which applies to the partner and LLC income, and it will generate loan proceeds, use, and coordination, blah, blah, blah. Okay, what this says, more or less, it says that the partnership itself pays rent for the business, pays mortgage interest for a business loan, for a business mortgage of the property, pays utilities, pays other essential expenses at the partnership level, not the partner level. So it's most natural to provide funds for the expenses of the partnership, not individual partnerships. Now, very important, if you're a Schedule C filer, which is different than this, and you have a home office, it's going to be difficult for you to prove your rental expenses for the business because you're not actually paying it. So you might have to want to get with your accountant in terms of how you're claiming or splitting off the office rent portion of your house for the business. You might have to do some work in terms of including that in the expenditure itself. But when you're a partnership, hopefully the partnership itself is paying the business rent itself. That's kind of what it says, that to prevent that confusion, to separate the owner of the partnership or the partner and the partnership itself, because the purpose of this loan is to fund payroll, to fund business rent, to fund business utilities, and to fund the mortgage interest that the business is paying on paying their building, their warehouse that they need to operate their business. So you need to understand the intent of the law in order to understand why all these clarifications are coming in. Now let's scroll down a little bit more and let's go to where it says the SBA will issue additional guidance, so we don't have that yet, for those individuals with self-employed income who were not in operation in 2019. In other words, they don't have a Schedule C, they can't create a Schedule C because it's not part of their exercise, but were in operation in February 15, 2020. So this is anyone that started their business after December 31st, 2019, and the business was active at February 15th. So anyone that started that business in a really short period of time, January 1st, 2020, February 15, 2020, there's going to be some additional guidance on how that's going to work. And you have to, the condition number 2 is your intention is that you will file a Schedule C 2020. My prediction is when the guidance comes in, you just have to create a version of the Schedule C draft for that period. And it's going to be something that you probably just testify or certify that is accurate. You might get a bank come back and say, well, show me your bank account so we can see that income flow. Show me your invoices. Show me something to prove that you were in business during that time, because you don't even have a tax return to prove. Then it says here, how do I calculate the maximum amount I can borrow and what documentation is required? So we covered this in other videos, so I want to just go through it real quick. If you're a self-employed individual, if you're a sole proprietor, you're going to use only the net income of your business. You're going to find the Schedule C, line 31, that's the net profit. That number then will be limited to 100,000. So if you made more than 100,000, you're limited to 100,000. It needs to be a positive number. If the amount is 0 or less, you're not eligible for a PPP loan. So if you lost money in your 2019 tax return, you're not eligible for it. If you haven't filed, then think about possibly filing something with a profit instead of a loss if you want to be eligible for the PPP loan. However, you should consult your tax professional whether or not you want to pay the taxes in a business that you legitimately lost money on just to get the PPP loan. I think that doesn't make any sense. If your business had a loss, if you lost money, then get over it. You can't get the PPP, move forward. But it doesn't make sense for you to now file a 2019 tax return with net income because you really had a loss, but you wanted to omit some expenses and then get a PPP loan, but now pay more taxes in the process. It really doesn't make sense. That might be something you might want to think about hiring an accountant to analyze first. And then we're going to take that total dollar amount of that net profit capped at 100,000, and then we'll divide it by 12, multiply times 2.5, which basically caps the total amount you can borrow to 20,833. Then if you already got EIDL money, so if you got funded in EIDL money, which is anywhere between 1,000 and 10,000, usually it's about 1,000 per employee, and you have to have applied for this weeks ago to have had the funding in your bank account by the time you're watching this video. So if you did get that money, you have to roll that over. So you have to add that into the loan, and now that becomes part of the loan. Okay, so now you're going to owe the new PPP loan and the EIDL into one loan, and they're going to forgive the portion of the EIDL if you roll it over as well. Or at least that's what it seems like. It says it right here because it doesn't have to be paid. So from what this says is anything you got an EIDL advance, it's a grant, it gets rolled over, but it also kind of goes away when it comes time to forgiveness. Now it says here, regardless of whether you filed a 2019 tax return with the IRS, you must provide a 2019 Schedule C with your PPP loan to substantiate the amounts applied for the PPP loan. Okay, so let me stop there for a second. So what this says is, if you haven't filed, you have to prepare one anyway to substantiate it. And it also says that if you haven't filed, you're probably going to have a 1099 form that shows you the gross amount, the top line amount that you received. And most people are using just that in order to get the PPP loan. But you may have to accompany that with additional documents like an invoice, a bank statement that shows the income flow, a book or record that establishes that you were self-employed. Basically says provide some accounting, provide some bank statements, just provide some proof that you actually received income because you don't have a Schedule C tax return filed, right? So it says if you don't have it, on top of the fact that you're going to show a draft of one, you're going to have to show documents that prove that that really was income you received in 2019. Now, if you're going to do it for 2020, or actually for the 2020 portion, you must provide something in 2020, like invoices, bank statements, book or record that establish you were in business in February 15, 2020. So what this is saying is, even if you have a Schedule C done and you filed a tax return in 2019, you still may need to prove that you were in business through February 15th. So it's saying have some additional information. Generally for my clients, I'll have a profit and loss from January 1st to February 15th already ready. I would have the two bank statements, January and February, so I can show the money flow, or maybe have some spreadsheets in the event that maybe is some cash-based income, which makes things a little bit tougher. And then it says that there's situations where you can be self-employed and have employees. So then this goes through the fact that you're going to combine them, that you're going to use your net profit plus the wages from your employees. So it's a combination between the net profit of the income that you got as a sole proprietor plus whatever you paid your employees. It says here where to get the information from. You're going to get it from adding all the amounts in the 941 forms, line 5C. It's telling you exactly where to get the information from, which you can also get it from the W3 box 5. So both of them could work to find the amount. But if any individual employee got more than 100,000, you have to back out that excess. Now you can also include the health insurance contributions that you paid for employees. And if you're a self-employed individual that paid for your own health insurance, that could be included too as part of the calculation. And for that, you're going to go to Form Schedule C, line 14. So that's where that's going to go. Then you're going to look at retirement contributions, which is Form 1040 Schedule C, line 15, and then state and local taxes assessed in connection to employee compensation. So those are the three items that you add on top of your net income and your payroll costs, which is health insurance, retirement contributions, and state and local taxes. Now I'm going to pull up a Schedule C for a second. So this is the Schedule C, and one of the most popular things that I've gotten from YouTube, the request I've gotten, most popular request is, Hector, can you create a video that explains how to build a Schedule C? And I'll do that. Put in the comments below, as I mentioned before, if this is something you want me to do, to see if I prioritize it in my pipeline of videos, but usually your accountant takes care of this or your tax software takes care of this. So it says, what numbers are we looking at? So line 14 is your employee benefit programs. So that's going to be that retirement costs. And then it says line 31 is your net income, which is going to be that self-employed net income that we're going to use. And then we're going to have mortgage paid to banks, right? So any mortgages that you paid for business property, that's gonna go there as long as it's for business property. And then we have the utilities. So for the loan calculation specifically, we're only going to be using the employee expenses, which is under line 26 wages, and the benefit programs and the health insurance. But then for the forgiveness, we're going to be using all that plus the mortgage interest and the utilities. So now you know where all the information is on the Schedule C. However, when you do get this loan forgiven 8 weeks after you get funded, you're not going to have a Schedule C to go by. You're just going to have an internal profit and loss or balance sheet or something like that to go by. But this just gives you a general idea where they're getting all the information from. Now down here it says what you need to provide. You must provide a Schedule C for your self-employed income. You must provide the 941 forms or other equivalent forms, so W-3, payroll forms from your payroll company, whatever. State quarterly unemployment insurance forms, that's to prove the state unemployment tax, which is part of the loan calculation. And it says a payroll statement or similar document from January, whatever, 2020 through February 15th, just to prove that there was payroll, that you had employees during that time. Okay. Then here's the important part. This is the forgiveness portion. How can PPP loans be used by individuals with income from self-employment who file a Schedule C? And this is probably mostly focused around the portion that was never clear, which is how you're going to pay payroll if you don't have employees. So it says here, the proceeds of the PPP loan are to be used for the following. Owner's compensation replacement, calculated based on the net profit. So basically it says whatever your net profit is during the period of the 8 weeks after you get funded will be the owner's portion of the income or the owner's payroll. So you're going to have to prove that you had income, which makes things really, really tricky because some self-employed individuals might not have income during quarantine time. So this is going to get really, really interesting, and we'll see if some additional guidance comes out that explains how we're going to handle that problem. And then we have payroll costs, which that's already been explained. So as long as you continue to have payroll, the payroll cost will be included. Mortgage interest payments, but not the principal, just interest payment of a business mortgage obligation or personal property. Now, personal property is not talking about your house. It's talking about a vehicle for the business. It's talking about equipment loans. That's what that's talking about. Although it's not very clear, because usually you have a mortgage on a real estate property, not on a vehicle or some sort of business equipment, but it says any business mortgage obligation on real estate or personal property. So who knows really exactly what they mean by that, but on the example they're using, it says interest on your mortgage for your warehouse you purchased to store business equipment, or interest on a loan for a vehicle you use to perform your business. Okay, that's more clear. That's actually not unclear at all. That's perfect. Then we have business rent payments. So rent you pay for an office, for a building, for a warehouse, not for your house. Then we have business utilities payments like cost of electricity for your warehouse. You rent gas for driving your vehicle. So it's interesting. Gas you use for driving your vehicle. That's a new one. So I guess that becomes utility. Okay, that's actually a really important one. Now, what makes things confusing for self-employed people is many times they don't have a business vehicle. Many times they don't have a warehouse, right? They use an office in their house, they're working from home, and they use their personal vehicle for business use. So that's going to get really tricky. Again, this is not really clear in terms of the mechanics of how you will prove that. But at least the information is very clear about what is eligible for the forgiveness portion. All right, let's see what we have. You must have claimed or entitled to claim a deduction for those expenses in 2019, Schedule C, for them to be permissible during the 8-week period following the first disbursement of the covered period when you get the loan. So what that means is if you have never claimed that rent, that vehicle that equipment, whatever, if you have never rented that before in the past, you cannot use it this time. So it can be, basically what it says, it can't be a brand new obligation. It has to be an obligation that's been going, and they're going to use that Schedule C form. So what's on the Schedule C is really, really important, because even though you're not going to use the same Schedule C for 2019 to prove your forgiveness for the 8-week period after you get funded, they will use it as a baseline to see what underlying expenses your business already had in order to prove that the business must continue to have those expenses in order to survive. Let's see what else we got here. This one says, the administrator has determined that this limitation on self-employed individuals who file a Form 1040 Schedule C is consistent with the borrower certification by the Act that specifically says it needs to support ongoing operations of the borrower. So if your business has shut down and you cannot have ongoing operations, regardless of whether you're a partnership, corporation, self-employed, whatever, you have to support ongoing operations. That's the point that they're trying to make here, that this is not just free money for them to help you because you're going through a tough time. This is money for you to continue to operate as a business and essentially not send your employees to the unemployment office or not go to the unemployment office yourself as a self-employed individual because you don't have any money coming in. So that injection of capital is supposed to keep your business alive, so then you can turn around and be profitable. You can turn around and pay employees. Then it says, finally, although the Act makes business operations the official date February 15th, the eligibility for PPP loans, the administrator, in consultation with the secretary, has determined that self-employed individuals will rely on the 2019 Form 1040 of Schedule C. So this was a weird thing that was happening, because technically you had to go back 12 months based on the Act, or you had to prove what the snapshot looked like right there on the day, the official day that they're using as the disaster day, February 15th. So this is saying, although that's the circumstance and that was the spirit of the Act originally, we are making it okay to use as verifiable documentation January 1st to December 31st. So all they're saying is it's easier logistically and administratively to use the look back period of 2019 in order to determine eligibility for this. However, for individuals with income from self-employment in 2019, which they have filed or will file 2019 return, expenses incurred between January 1st, 2020 and February 14th may not be considered because of lack of verifiable documentation for this period. So what this is saying is your 2019 Schedule C, your 1040 return, is gold, is the most important thing. So right now you got to call your accountant ASAP and say, hey, I need my Schedule C done, because otherwise my banks may not give me the PPP loan, or they may not even accept it, or they may push back the loan. And right now, as of the day of this video, funds are running out. Hopefully Congress will expand it another 200 billion or 250 billion or 300 billion or whatever. They're in the talks and negotiating on that as we speak. But right now the funds are very limited. So if you need to apply for this, you want to do it ASAP. And if you don't have a Schedule C, prepare one or get you with your accountant and get a copy of it. Then let's move on to what amounts shall be eligible for forgiveness. Okay, so this is saying the amount of forgiveness can be up to the full amount of the loan plus accrued interest. So it's accruing some interest. That means you're not going to pay it. It will be forgiven. And the actual amount of forgiveness will depend in part on the total amount of money you spent during the 8-week period. So you have to spend the money. So you have to spend it on payroll costs, right? And it needs to be the 75% of what you get needs to be paid in a payroll cost. So for during the 8-week period per employee, you have a maximum of $15,385 per individual. So if individuals got $100,000 worth of payroll calculation to fund you on that PPP loan, which will be approximately $20,833, 75% of that is the $15,385. So it tells you there, right there, what the maximum amount of expenditure per employee during the 8-week period will be allocable to the forgiveness. Then it says here, as well as covered benefits for the employees, but not the owners. So the owners of the business, their health insurance, their retirement contributions will not be included in the forgiveness calculation. So only the healthcare expenses for your employees, only the retirement contributions for your employees, and only the state taxes imposed for your employees. Now that last state taxes, it's really, really small. So usually it's not really a big number, but it will help. Then it says owner's compensation replacement, which is specifically for the self-employed portion of this. You're going to calculate originally based on your 2019 profits as per paragraph 1B, with forgiveness of such amounts limited to 8 weeks worth. So divide that by 52, multiply it times 8 of the net profit in 2019, but excluding any qualified sick pay. Okay, so that's if you got sick pay as an individual, that would be excluded. So in other words, what this is saying is during the 8-week period, the amount of forgiveness is limited to your net income divided by 52 multiplied by 8. That total amount will be forgiven. It doesn't say here anywhere that you have to prove that you got the net income in 2020. I don't know. It doesn't say it. It doesn't say here that you have to show a P&L for the 8-week period. It just says that sort of automatically will be forgiven for that 8-week period. So you have to be able to spend the rest of the money in the other things that we mentioned, like a business mortgage, like a rent payment on a business rent, and the utility payments. So unless there's additional clarification from Treasury from this, there's a portion of the self-employed PPP that will not be forgiven if you don't have those additional expenditures to make. Let's see what else says here. The administrator, in consultation with the secretary, has determined it is appropriate to limit forgiveness for the owner's compensation replacement individuals with self-employment income who file the Schedule C for the 8 weeks worth. This is most consistent with the structure of the okay. So I don't know what that says. I don't know if that says you need to prove that you had income or you didn't. I think it just kind of says that the total amount you receive divided by 52 multiplied by 8 will be the forgiven portion. And if you don't have those additional expenses to make, that other 25% will not be forgiven. That to me, I think that's what it says. I read this a couple of times and I can't figure out exactly how you will prove that you had more than 75%. Possibly you don't even need to have more than that 75%. Just up to that 75% will be forgivable, and make sure you can spend the other money in rent, utilities, and the mortgage interest. My recommendation would be to have yourself rent part of your house to the business and and assuming that was done in 2019, continue to do that. And that will require you to also have some rental income in your personal return. That complicates things a little bit. I assume that most people don't have that. So that's maybe a solution or a workaround. But for people that are working from home, it looks like the forgiveness is not the whole thing. It's only the net income divided by 52 multiplied times 8, which is 75% of the amount you get. Finally, 75% of the loan forgiven must be attributable to payroll for the reasons of the PPP rule. So that's it. I think that's what I can get from here. Going to the Treasury website, there's a lot more meat in there, but in an effort not to make the video so long, that this video has gone long enough, check it out yourself. Hopefully this clarified a couple of things. Hopefully I didn't confuse you a lot more, and if it did, ask your questions in the comments below. I don't have the answer to the burning question that people have, which is, what if I have a personal checking account? I don't have a business checking account, and none of my banks are allowing me to apply because I don't have a business checking account. Unfortunately, nowhere here in this document or any documents it says that you must have a business checking account, or that banks are allowed to decide what type of account you need to have in order to apply. Unfortunately, right now, we're at the mercy of the banks. If the banks allowed self-employed people to apply without a business checking account, great. If they don't, then I think they need to be reported. I think they need to be fined. I think they should be sued. All those things, I agree with you. But for the time being, that thought process doesn't help anyone. What you need to do is do your research, look into PayPal, look into Cabbage, look into different non-bank lenders like Fountainhead Capital or even Lendio or Fundera or a bank called Cross River Bank. I mean, do your research in terms of what banks are offering this. I'm not going to endorse any of them because I don't work with any of them. So I can't tell you, yeah, it works great. It's worth for you to give them all your personal information. So that would be a choice that you make. And the other choice is go to a small community bank and see if they accept your self-employed PPP application without having a business checking account. So I apologize for that one. I don't have the answer. I'm getting ready to write a letter to my senator and sort of explain that problem. But hopefully this new interim rule added some additional much needed guidance, and hopefully it added a little bit more clarity versus confusion. We'll see. Let me know in the comments what you think. Ask your additional questions, and I'll see you in the next one.